Hello everybody, welcome to our Sharia investing series webinar. Okay, this webinar is brought to you by Bursa Malaysia Islamic capital market, and today's topic is how to make money in bear market. Okay, my name is Shane Choo. I'm the moderator for this webinar, and next to me we have Mr. Faiz Wahab, who is a licensed financial planner, and he's going to teach you. He's going to share with you how to make money in the bear market. Okay, Faiz, it's very nice to have you in our webinar tonight.
Thank you for inviting me tonight.
Okay, cool. So now this webinar is brought to you by Sharia Investing, Bursa Malaysia-i, which is the Islamic capital market of Bursa Malaysia, and is managed by LifeChamp. So as usual, disclaimer, whatever we share in this webinar or whatever our speakers share today on this webinar does not construe any buy or sell signals.
No.
Okay. Yeah, definitely no. So if you decide to buy or sell anything, you do it at your own risk. Okay. Today, whatever we discuss is only for educational purpose. So let me introduce to you the gentleman next to me. He is a very young but established speaker. I have actually spoken with him on maybe 7 to 9 occasions in different places around Malaysia. I've spoken with him in Labuan, I've spoken with him in Kuching, in Johor, and any part of the and any other part of Malaysia. He always impressed me with his ideas about Islamic capital market. So today he's going to talk about how we can make money in the bear market. So this is a bit new topic for you, I guess, because I've never seen him speak about this topic.
Actually, it's not a new topic for me, but
okay.
Yeah.
Okay, cool. So he's a Islamic financial advisor representative by the Bank Negara Malaysia. He's also a financial planner representative by the Securities Commission Malaysia. He also has qualification with the MFPC, which is a Malaysian Financial Planning Council. He's an affiliate Sharia registered financial planner, also a certified professional trainer, okay, under HRDF. And if you go to Bursa Marketplace and go to find the marketplace guru, he's the youngest marketplace guru.
Yes,
okay, I believe lah.
I
still
believe
the record holder. Okay? He's the youngest guru recognized by a Bursa Marketplace. Okay, so welcome to this webinar. So I'll hand over the rest to you.
Okay, thank you, Mr. Shane. Thank you, Bursa Malaysia-i. Thank you for LifeChamp for doing this webinar.
Yeah, this webinar is going to be 60 minutes with 45 minutes content and 15 minutes Q&A.
Yeah. Okay. So the bear market. Okay, the bear market. Everyone is saying about the bear market. Our market is not doing very well and whatnot. So
do you see the bear market is hitting us right now?
Yes, it's hitting us, but we have some different perspective. Okay, because when we are seeing the market using different perspective, then we are actually not seeing a real bear market. Okay, we are still in the bull market. Okay, the bull market is still intact, but in the short term perspective is
okay. So your view is that long term we are still on bull market, but short term perspective we are entering like minor small bear market.
Yes.
All right.
More like retracement.
Yeah, if we see the KLCI, we are still fluctuating, while the S&P 500 or the Dow Jones are already keep breaking record highs, right? So as investor, we're like, what's happening to our local market? If you feel the same, please also type yes in the chat box so we know what you feel. Okay?
Yeah. It's good for us to have feedback from you all, okay? Because otherwise we will not have the session interactively lah. Okay, we would like to have two-way communication from you all. Okay, if anything, you can post your questions.
Okay, or comment in the question box or chat box.
Okay, so back to the topic of bear market. Okay, for the conventional investing, okay, you have multiple option to invest during the bear market. Okay, you have the IDSS, you can go to inverse ETF and whatnot. Okay, I'm not sure the ETF already in the market or not, but I've heard some investment bank are doing the inverse ETF. Okay, otherwise you can go to the futures, you can short the market. Okay, but we are not we are not going to share about that lah. Okay, today.
So today not about share about futures now.
No. Because the Sharia perspective of view, okay, we are prohibited to do IDSS. We cannot do the futures. Yes, FKRI is not Sharia compliant.
Actually, FKRI is definitely not Sharia compliant because it's composed of companies that are not Sharia compliant.
Yes.
Not all 30 companies are Sharia compliant.
Yes.
That's why FKRI is not Sharia compliant.
Yes.
But futures on FCPO is Sharia compliant, right?
Yes. The only Sharia compliant futures is in the FCPO.
So why IDSS is not Sharia compliant?
Okay, there is very long topic if we want to comment about the IDSS. Okay, but the simple way to talk why or to explain why the IDSS is not Sharia compliant because you currently don't hold the goods. Okay, you don't own the equity or the stock yet. Okay, so that's why it's prohibited. It's like I'm selling you this pointer, but I don't have it yet, so I cannot sell to you. Okay, so that's the basic idea why the IDSS is the Sharia compliance.
Okay, I see.
So I heard some questions from my students, from my friends, in fact, some other investors. They are saying how we can make money from this bear market because we cannot do IDSS, we cannot go to short the FKRI and whatnot. So it's very hard for the Sharia investor to make money in this kind of market. Okay, so that's why I'm here, okay, to share with you on how you make money in the bear market. Okay, even though you are not Sharia investor, but you can implement these things. It's good for everyone. Okay, so I hope you will benefit something from this session.
Sure.
Okay. So understanding the market cycle. To understand the market cycle, we have a few school of thought, but I'm going to use the Wyckoff price market cycle to understand the market cycle. Okay, basically this is the Wyckoff price cycle. Okay, this is the overview of the price cycle. Okay, basically Wyckoff separate the market into 4 segments or 4 phases. Okay, the first phase is the accumulation. We call it the accumulation phase. Okay, when the equities or shares or any of the products is oversold. Okay, the oversold area.
The accumulation phase is where investors like Warren Buffett are slowly accumulating their wealth, their assets, their shares at much depressed prices.
Yes, they buy it at a discounted price. Okay, so that's the accumulation area where the market is oversold. So everyone is panicked from the market. They left the market, but this big investor, this value investor, they are making money by accumulating at the oversold area. Okay, next one. Okay, the next phase in the Wyckoff price cycle is the markup phase. Okay, when the markup phase happen, okay, when the demand is greater than the supply, we know what move the market, what move the price of the shares. It is about demand and supply. When the supply is less and the demand is getting big enough, then the price of shares will go up. Okay, that explains why the markup phase is happening. Okay, the next phase is the third phase is the distribution phase. We call it as distribution phase, or we call it as the distribution area, when the market is overheat. Okay, everything is overbought. So if you are a value investor, the price of the stock is already overpriced. Okay, so at this phase, okay, people are start to take profit. Obviously, when you are buying a share at 1 ringgit and the price already go up to 2 ringgit, then obviously you will take profit from your investment. Okay, it's no brain. Okay, everyone in the market have this chance, buy low and sell high. Obviously, when the price is going too high, people will take profit and will keep away from the market. Okay, because of this distribution area or taking profit activities, okay, the supply become more and more in the market. that's why it push the market down, which is go to the markdown phase. Okay, this is the basic of the market cycle. Okay, you have to understand this market cycle in order for you to make decision on how you want to invest in the market. Okay, because otherwise you will be beaten by the market because you don't know which phase are the market now. Okay, every market cycle there are ways to make money. Okay, so what do you think our market is? Do you think it is in the accumulation area, it is in markup area, or dispersion area, or the markdown? So maybe you can post your comment into our comment box here. Okay, so we know what's your opinion on our local market. Okay, so
Yeah, some say markdown.
markdown. You think it's still markdown, or you think it's the
Many said markdown.
many okay, they are saying the markdown. Okay, markdown phase. All right, no problem. Okay, we can argue on which phase we are at. Okay, no problem. Okay, so trends. Okay, the technical analysis help us to identify what is the current market. Okay, we have the uptrend, we have the downtrend, we have a sideways. I'm not going to teach you how to draw the line or how to make draw the trend line, but I will show and share with you what is the three trend in the market. Okay, first is the uptrend. I mean the sideways. Okay, sideways happens when the price is moving in a range. Okay, we can see here. Okay, the price, it tries to break the resistance line, but it cannot break the resistance line, so it go down and it try to break for another time, for the second time, but it happens to be false breakout there. So after the false breakout, then the price is going down back and is trading in that kind of range. So this is the sideways trend. Okay, so the next trend is the uptrend. Okay, the uptrend is when we are connecting the lows. Okay, we can see that it is making higher lows. Okay, we can see at the first low it is lower than the second low. Okay, so when we connect these 2 points, it make a uptrend trend line. Okay, so the characteristic of this uptrend is higher low and higher high. Okay, this is obviously the uptrend. Okay, the example of uptrend. Okay, next one is the downtrend. Okay, downtrend. So downtrend, the characteristic of downtrend is when we are connecting the highs. Okay, you can see that it makes the lower highs. Okay, so the first high is higher than the second high. So when we connect the line, so it makes the downtrend line. So it's very simple for us to use the trend line to help us to determine the market cycle. Okay, so I believe many of you saying that this is the markdown because we are saying the downtrend, or we can call it as the bear is coming. During this bear market, I believe many of retail investor, retail trader, they are losing more money than making money in the market. Okay, so yeah, I'm here to help you, okay, with what you can do in this kind of market. So I believe most of us share their thoughts. It is the markdown phase and it's the downtrend. Okay, so that's our current market right now. Okay, so we want to look at our market right now. Okay, what is the trend happening in our market? Okay, so for the short-term perspective, we can see that when we are connecting the highs, okay, we can see there is the downtrend line that we can draw from this chart. Okay, it's about 1 year chart. So for short-term perspective, it's a downtrend. Okay, we can agree on that. Okay, I won't argue on that one. Okay, because yes, it is downtrend for the short-term perspective. Okay, for the medium-term perspective, okay, we want to put it in a longer time frame, is about 7 years. Okay, we can see that the market is trying to hit the highs at 1,800 something. Okay, so it failed at the 1,800, so it goes back down to this level, about 1,600. Okay, this kind of price range. So for this medium term perspective, okay, we can see it making the sideways trend. Okay, we can see that it making sideways trend. So when the price already hit the 1,600 area, so it bounced back. It bounced back for the second time. We can see it bounced on the 2015. Okay, back in 2015 it bounced. So it bounced for the second time in 2019. Okay, at the same price level. So for the long-term perspective, okay, we can see that the market is still in intact in bull. Okay, the bull is still intact in the long-term, very long-term perspective. We can see we can say this is the very long-term perspective. Okay, because we are taking about more than 10 years. Okay, for this chart. Okay, it's back from 1994. Okay, so if the market violate this long-term trend line, then oh my god, okay, you have to be super worried if the market break this trend line. But we can see from this trend line, the bull is still there, but it is in the very long-term perspective. Okay, so if you ask me, okay, what is our market situation, then this is my answer. Okay, we can have the bullish, we can have the bearish, or we can have the monkey wish sideways. Okay, alright. Okay. So it depends on your perspective. Okay, which perspective are you referring to? Okay, so but I believe, okay, I believe most of us are referring the shorter time frame, which is the bear market. Okay, but I have to assure you that the long term, the market is still in the bull run. Okay, so understanding the types of asset in Bursa Malaysia-i products, because this session is the Bursa Malaysia-i session, so we are going to share about the Bursa Malaysia-i products. Okay, some of the conventional products is not here, so we are focusing on the Bursa Malaysia-i product only. Okay, so as October 2019, we have already about 702 Islamic stock or Sharia compliant stocks, okay, which comprise of 598 in the main market, 97 in the East market, and 7 in the Lead market. Okay, so we have 4 indices, 4 Islamic indices. Okay, we have 4 ETBs, but the ETBs is covered in the last session, right?
Correct.
So I won't touch on that because otherwise it will be redundant. Okay, so I will focus on the stocks, indices, ETF. Okay, Islamic ETF. We have 6 Islamic ETF and 4 Islamic REITs. Okay, so we have to understand these different type of asset having different function at every market situation. Okay, because during some period of time, a certain asset class is bullish, where the others are bearish. So we have to understand this one. Okay, because in your portfolio, I don't know how you make your portfolio, but I believe in our portfolio we have to be diversified. This is the basic things of any investment. Okay, you have to diversify, because otherwise you cannot control your risk. We want to diversify in order to control our risk. Okay, to lower down our risk. If you put your eggs in one basket, then something happened to the basket, and you are really bad. Okay, something bad will happen to you. Okay, so you have to understand, you have to, in your portfolio, you have to have some combination of stocks. You have to have ETF, you have REITs or indices. Okay, or you can add the ETFs too. Okay, but I won't cover the ETFs in this section. Okay. So investment risk, we know investment risk really correlated with the asset class. Okay, we know the small cap is the highest risk. Okay, small cap is the highest risk because it the volatility of the small cap stocks are very high. Okay, so it give you the higher risk. For the large cap stocks, their volatility is little bit low. Okay, compared to the small cap stocks. So it gives you lesser risk for in terms of the fluctuation of the price. REITs and ETF, the price fluctuation is not that high compared to the large cap. So yeah, okay, so it gives you a better risk. I mean, they have a lower risk than a large cap stock. And yes, ETFs, if you look at the ETFs chart, then you can see the price movement is very little. So in terms of that price movement, so it gives you very small standard deviation, which is associated with the risk. Okay, in order to measure the risk, we use standard deviation to measure the risk. Okay, so this is very basic one. Okay, we know the small cap is very high risk, the large cap is lower than the small cap. REITs and ETF much better than the large cap, and ETFs is much lower risk than the other three. So many in the Bursa Malaysia. So which one you want to select? Okay, because this is, I receive this kind of question every day. What stocks to buy? What stocks to let go? What stocks to add on into your portfolio? Because people are losing money. So you have to utilize every of the Bursa Malaysia-i in your portfolio in terms of the diversification. Okay. Okay, we want to talk about diversification. We want to talk about the stock sectors. Okay, we have these three kind of sectors. Okay, we have the sensitive sectors, which comprise the communication, energy, industrial, and the technology. Next one, you have the cyclical. Cyclical compromise of the basic materials, consumer cyclicals, financial service, banks, insurance, okay, and the real estate. And we have these third categories, okay, which is the defensive categories, which is the consumer staples, healthcare, and the utilities. So during bear market, if you are expecting another downturn in our market, okay, if you expect some recession is about to happen, I'm not telling you that the recession is going to happen, but if you expect that one, then I believe you have to put more defensive stock into your portfolio, okay, rather than the sensitive and the cyclical. Okay, because sensitive and cyclical, this is where these stock sectors will be badly impacted if the recession happen. Okay, so the defensive stock sectors, they will most likely will survive in this kind of market situation. And if, okay, we are talking about worst case scenario. Okay, worst case scenario is the recession. If the recession happen, we don't know when it will happen, but if, okay, if, so you might think about the defensive stock. Okay, right.
So what is sensitive sector? What do you mean by sensitive?
Sensitive sector, when the market going up, they will be the first one will pick up. Okay, during good time. Okay, during good time. So this kind of business, communications, energy, okay, industrial and technology will get the benefit.
So these are more sensitive sector lah, huh?
Yeah.
Like they are faster than the rest to respond to any market dynamic. Okay?
Yes.
Okay. Understand.
In fact, we are seeing a lot of penny stock. We are seeing small cap. Okay, small cap is in these technologies, in energy and communication service, but some of the communication service are the KLCI constituents. Okay, but we see most of the technologies are in the small cap. Okay, right. And we see the consumer staples, healthcare, utilities. Obviously, these kind of defensive stocks are in the KLCI constituents or the large cap. Okay, we can see some of them are in the small cap, but it's very not many okay, in the small cap. So what is defensive stock? Okay, defensive stock is a stock that provides a constant dividend and stable earnings regardless of the state of the overall stock market. Because of the constant demand for their products, defensive stocks tend to remain stable during the various phases of the business cycle. Okay, during the bad market, I mean the bear market, during the hard time, okay, these defensive stocks are most likely to be resilient, okay, to the market because of their products. Okay, we can see that one of the sector in this defensive stock are the healthcare, consumer staples, and the utilities. Okay, so utilities, obviously, in any market situation, people will still use electricity, people will still need for the water, okay, clean water. So in any market situation, people will still consume this. See? Okay, I never see that during the recession, people start to stop using the electricity. People don't use aircon anymore. People will still use aircon. Okay, people will still use the electricity. They have to charge their phone. Everything in our life here, I mean, nowadays we need the electricity. So utilities will be, yeah, they will do good in any market situation. Okay, but during the bear market, this one will actually survive. Okay. Next one is the consumer staples. Okay, consumer staples is very defensive. Okay, they include food, beverages, hygiene products, tobacco. But I have to explain that tobacco is not Sharia compliance. Okay, but this is the textbook explanation for you. Okay, and household items. So in a bad market or during the hard time, okay, people still consume food. We as a Malaysian, we love to eat. Okay, during any market situation, we eat. Okay, so yes, we still need food, especially the basic products like poultry, eggs, milk, rice, sugar. So these kind of products that we have to consume in any market situation. Okay, especially in good market, we consume more. Okay, but in during bad time, we still have to consume these kind of products. Okay, next one. Oh, we eat so much. Okay, we in Malaysia love to eat, so we have this healthcare stock. Okay, healthcare, they are very resilient during the hard time, because as we know, people will need to have a good healthcare. Even in the recession time, people will still need to look at their health. Okay, so during good market, people go to hospital. During the bad market, people still go to hospital. But the reason for us to go to the hospital during the good market is obviously because of we are eating too much. Okay, we are eating too much, then we have the diabetes, we have what else, obesity. So okay, we eat, so
High blood pressure.
High blood pressure and whatnot. Okay, so that's during the good market. Okay, during the bad market, we still need to go to the hospital, because some of us might see some stocks drop by 30%, 50%, then they get the heart attack. So they need to admit to a good, very good hospital to get treatment. Okay, so healthcare, consumer staples, and utilities. This is the defensive stock. these stocks are more likely to survive during the hard time in the market. Okay, so if you're expecting the market is going to be much more lower, then I think this type of stocks that you want to add into your portfolio. All right, but this is one of the way. This is one of the way. We have another way for you to survive in this bad market or this bear market. Okay, this is one of the way. Okay, I will share with you the next other ways. There are a few ways that we can survive in this market. Okay, we have this ETF in our market. I believe not many retail investors are aware that we have this ETF. ETF is like a mutual fund, okay, or unit trust, okay. But the difference between unit trust or mutual fund with this ETF is traded in the Bursa, okay. So you can use your stock account or your CDS account. Okay, you want to trade the ETF, no problem. Okay, you don't have to open another account, so you still can use the same account to trade the ETF. Okay, I believe people are already understood this ETF, so I won't go very deep on this ETF. I want to share on how to use or utilize this ETF for you to make money from the market. Okay, if you just want to diversify your portfolio, okay, you don't want to think very much, okay, it's very simple for you to do the diversification. So you just use this ETF for a diversification purpose, okay. But we still can use this ETF for another purpose. Okay, we can use for hedging too. Okay, yes, hedging can be made, okay, using this ETF. Okay, because some of the Sharia investor they condemn about this hedging. Okay, how to hedge the according to the Sharia way. Okay, because you cannot do IDSS, you cannot short the market. Okay, so I will show you how to hedge, okay, using this ETF. Okay, so this is the structure of ETF. Instead of you buying one stock, you are buying multiple stocks, so it lower down your risk. Because if you are putting your money into one stock only, then you putting your money all your eggs in a basket. Something happened to the stock, the earning drop, then the price of that share will drop. Okay, so if you're investing in ETF, okay, let's say one company is losing money, the other company is making money, and we can cover this one loss. So we can see that the ETF will be very resilient, because only one company is losing money, the other company is making money, and even they can cover the losses. Okay, so ETF is very good for diversification. Okay, so that's one way for you to use ETF. Okay, it lower down your risk by diversification. Okay, so we have quite a number ETF listed in the Bursa Malaysia, but the green one is the Sharia compliance one. Okay, so we have the Dow Jones Islamic Market Malaysia Titan 25, MSCI Malaysia Islamic Dividend. We have the Thomson Reuters Asia Pacific as Japan Islamic Agribusiness. Okay, these three, and we have some more. Okay, we have the Trade Plus Sharia Gold Tracker and the My ETF Dow Jones US Titan 50. Okay, so these three, the Islamic Market Titan 25, the Islamic Dividend, and the Asia Pacific, it gives you the opportunity to diversify your investment, especially the Islamic Market Malaysia Titan 25, because you're putting your money into that ETF. That ETF comprises of 25 companies, so it putting your portfolio in a very diversified, okay, because you are buying 25 companies. All right, So if you want to play for the dividend, so you can go to the Islamic dividend, okay, MSCI Malaysia Islamic dividend. But what interests me is the Trade Plus Sharia Gold Tracker and the My ETF Dow Jones US 50. Okay, I will show why this two ETF is very interesting for you to utilize these products, for you to make money from this kind of market situation. Okay, so this is the correlation between gold and KLCI, our KLCI. Okay, so we can see that, okay, during the KLCI is going up, okay, the gold is going down. Okay, we can see that during 2013, okay, when the KLCI is going down, that the gold is really go up. Okay, so and recently, okay, when our KLCI is moving down, then the gold, okay, the yellow, I mean the orange, okay, the orange, okay, the orange line is going up. So what we can deduce from this data shows that the KLCI and the gold have the inverse relationship. Okay, means that one go up, one go down, one go down, one go up. Okay, so that if you expect our KLCI is going further down, then you might be thinking about acquiring some gold. Okay, how to acquire gold using this Bursa Malaysia? Yeah, we have this one. Okay, we have this Trade Plus Sharia Gold
ETF.
Gold ETF. It tracks the gold index. Okay, so when the gold in the international level, they're going up, so the ETF also going up.
Yeah, it tracks the gold by the London bullion market.
Yes.
It's issued by Affin Hwang.
Yeah.
So if you don't want the whole physical gold, store a physical gold at home, yeah, can consider buy this gold ETF issued by Affin Hwang and it's traded on Bursa Malaysia.
Yeah. Because the issue for holding physical gold is that you have the issue of storage, you have issue of the safety, the security. So this is the easiest way. Okay, this is the easiest way. In fact, if you want to liquidate your gold, okay, it's very easy because we have market maker, so you don't have to worry about liquidating your gold here. Okay, if you are buying the physical gold, then you have to find the buyer for you to make the transaction. Okay, but this gold ETF, they have the market maker, so you don't really have to worry about the liquidity of the ETF. Okay, so this is gold and KLCI. Okay, so if you want to hedge, this is one of the way. Okay, you cannot directly short the market, but this is how you hedge the market. Okay, instead of you buying equities, you're buying the gold in the gold ETF. Okay, so this is how you want to hedge the market according to the Sharia. Okay, by using the Sharia product, so you don't have to worry about the Sharia compliance issue and whatnot. So this is that the Sharia compliance product, so you can utilize this product for your own good. Okay. This is S&P 500. This is what Shane been talking, okay, at the earlier of the session. Okay, the S&P 500 is making all-time high. Okay, it breaks last time high, it go up and up and up. So if we are referring to the Wyckoff price cycle, this is maybe the further mark up. Okay, we can argue on that. Okay, but I believe this S&P 500 is very attractive. In fact, many of our traders love to trade the US market, okay, because of this one. But yeah, I will go on that later. Okay, so this is the S&P 500. Okay, S&P 500. So very bullish right now. We have this. If you are trading for short term, this is very kind of trend that you want to ride. Okay. Wow. Now next one is the Dow Jones. Okay, Dow Jones Industrial Average Index. It also like the same like the S&P 500. It makes the all-time high, so it is very bullish right now. Okay, in fact, the US is going to the presidential election next year, right? Okay,
next November.
Next November. Okay, so we believe for this election, they will push the market up furthermore. Okay, but I have to put some note here. Okay, when we see this kind of market really overheat. Okay, so as for me as a value investor, I don't really like to invest in this very high risk, okay, because you're on the peak, okay, when you're at the peak, when the market drop, then you are the one that suffer very much. Okay, so when you are buying low, then obviously your margin of safety is better than you are buying at the higher. Okay, so why I share you about this S&P 500, this Dow Jones Industrial Average Index, what it have to do with our local market. Okay, so do you remember I told you about the ETF? Okay, how we can use or utilize the ETF? Okay, yes, we have this my ETF US 50. Okay, it tracks the Dow Jones and the S&P 500. Okay, if you can see here, the line for this ETF is the black line. Okay, the S&P 500 is the yellow line, and the Dow Jones is the what we call that, turquoise.
I would just say blue lah.
Blue. Okay, that blue line. Okay, so we can see that when the S&P 500 and the Dow Jones are going down in last September, okay, then the ETF also going down, okay, because it tracks the S&P 500 and the Dow Jones index.
It tracks the largest 50, am I right?
Yes, largest 50.
See, the largest 50 in America outperform, our ETF outperform the
Yes.
Dow Jones index and the S&P 500 index.
Yes.
That is really interesting. Because Dow Jones consists of 30 stocks.
Okay.
Our US ETF tracks 50 largest stocks.
Yes.
So slightly bigger, slightly bigger constituents. I mean, have more selection of stocks inside the the ETF, but it outperforms the Dow 30 as also the 500 companies in S&P.
Yes. So
that's a bit surprising to me.
Yeah, from this data, okay, we can assure you that our ETF actually doing better than the S&P 500 and the Dow Jones. Okay, so if you want to ride this short-term trend, the bullish trend in the US market, so you can utilize this ETF. Okay, the US ETF, my ETF, US 50. In fact, in America, people love to buy ETF. I don't know why in Malaysia. Okay, I think because of the exposure to the retail investor, they don't really know this ETF exists in the market. Okay, because sometimes people ask me, oh, there are ETF in our market, so they love to invest in the US. They don't know that our local market, we have this ETF to help them to invest in the US.
Yeah, maybe it's a liquidity issue.
Liquidity issue. Okay, this is the common question that I get when I talk about ETF. Okay, actually our ETF, we have market maker. Okay, so when there are market maker, so you don't really have to worry about the liquidity issue. Okay, you can try first. Okay, you put some money into the ETF, then you see how liquid it is. Okay, so if you don't trust me, then you can try yourself.
Who are the market maker? Are they the issuer?
They are the issuer and the institutions.
Okay.
obviously the institution, they love to buy these kind of things at the lower point. Okay, we are the retailer, we love to buy this at the higher point. So that's the problem with the retail. Okay, next one, the REITs. Okay, the REITs for the Sharia REITs or Sharia compliant real estate investment trust. I believe that you already understand what is REITs. Okay, I don't want to elaborate more on REITs, but REITs are actually quite defensive in the market because people don't really actually trade REITs. They buy REITs for the dividend yield. Okay, so in order for you to make money in the market, okay, in the bear market, so you might be think about acquiring some REITs into your portfolio, adding REITs into your portfolio. Okay, because we know REITs are very stable in their dividend yield. Okay, their dividend is very stable, so you still can make money from REITs. Okay, but I don't want to elaborate more on REITs. Okay, but we know the Al-Aqar REITs, it holds the hospitals. Okay, so yeah, during bad market, people still go to the hospital. KLCC, people are still buying things. Okay, at KLCC, in fact, the KLCC have the office, okay, and retail properties.
Yeah, but if a bear market comes, right, people will reduce the demand for consumer discretionary products.
Yes.
Okay, in your slide, probably is labeled as consumer cyclical products.
Yes.
So maybe the KLCC staples, the REITs and the staple securities will get affected because in KLCC we know there are
Yes.
also there are also a number of high-end brands.
Yes.
Okay. Yeah.
But on that one, we have some argument on this one. Okay, because this high brand, their target market is different. So
you're suggesting that they still can afford to buy.
Yeah, this kind of target market, they still can afford to buy. Okay, because it's not in the mass market.
But KLCC REITs also control other properties such as the Menara Tree, Menara Zone, and the Mandarin Oriental Hotel. Yeah, I have a wide portfolio of real estate around that area.
So As-Salam and Aziz, you can do further research on these two REITs. So I'm not saying that you have to buy any of these, but you might think about adding up any of these REITs into your portfolio. Okay, but I have to make some note here because sometimes the market is irrational. Okay, so during the bear market, every stocks are getting impacted, getting hit by this bear sentiment. Okay, so I have to say that some REITs, okay, they might be traded at lower price, okay, but the main purpose for you to add REITs into your portfolio because of the dividend. Okay, if you cannot bear the price movement, then I don't think you can bear that one lah. So the main idea here is REITs is for you to get the dividend. Okay, right. So that's about REITs. Okay, next one is implementing the value investing. Who is the Sifu of the value investing?
Warren Buffett, I guess.
Warren Buffett, he has his own Sifu, the Benjamin Graham. Okay, that's the person that create this value investing. But yes, we know the person that implement this value investing is the Warren Buffett, very well-known investor. He's the most successful investor, I believe. Okay, so the first one is you are selecting the defensive stocks. Okay, the next option is your hedging. Okay, you use the gold, okay, to go against the equity market. Okay, the next one is you buying the US ETF. This is the next. I mean, the fourth strategy is by you buying REITs for the dividend yield. Okay, the fifth strategy is you implementing this value investing. Okay, the value investing is where you buy securities, good companies, okay, at a much discount price. We just went through the 11/11. What happened in 11/11?
Shopping.
Yeah, shopping. We have the e-commerce shopping time. Okay, so we as Malaysian, we love shopping. We love to shop at a discounted price. But I don't know why the retail investor they don't do this in their practice in investing in the stock market. Okay, when a shirt is selling at 100 ringgit, okay, people don't really buy it, but at 3 ringgit, people already kau buy it because of the discount. But when the stock market, in the stock market, the company is traded at 1 ringgit, so when the price is going to 80 cents, people are dumping their share. In fact, they should add their more shares, okay, if the company is doing good lah. Okay, so I have to put some disclaimer if the company is doing good. Okay, so you want to buy at lower price because of you have a better margin of safety. Okay, so if you are expecting the bear market to prolong, so you might be interested in finding good company, okay, to invest in our market. So value investing checklist, this is one of the criteria. We have a very long list to do the assessment for value investing, but I just show you this very basic criteria. First one is low price to book. Okay, price to book in terms of the valuation, and low PE, okay, price to earning, and high dividend. So I won't elaborate very detail on the price to book, what is price to earning, what is PE ratio, what is dividend yield and whatnot. But this is the criteria that you can implement if you want to do the value investing. So can we go to the Bursa Marketplace website?
Can. You need to go to Bursa Marketplace.
Yeah, I want to go to the Bursa Marketplace. Okay, because this is my next slide.
Okay, so live demo, is it?
Live demo.
Okay, just give me a minute. I don't have the mouse with me right now, but you can use this. Okay, just give me a minute. Wait. So Bursa.
Okay, Bursa Marketplace is very good website for you to use. Okay, because we have this. You can go to the screen, right?
Yes, where you wanna go?
Let's do the screener. I mean
screener.
Yeah, the screener.
Yeah, let me see where the screen is.
Yes, the screener. This Bursa Marketplace guru, they invested like millions to help our investor to make decision, very good decision in the market. Okay, so can I use?
Yes, you can use. You can use.
Okay, sure. So for Sharia investor, you have to put this one. Okay, put the
turn on the Sharia
mode. Okay, the moon sign. Okay, the moon sign, the Sharia mode sign. Okay, so
let me move to the side.
Okay. Okay, so at earlier of my session, I share you about the defensive stock. So we would like to see the defensive stock first. Okay, so we have this industry. So you can go to the utilities, healthcare, and the consumer non-cyclicals. So this screener is very, very good for you to make your watch list or what stock that you want to add into your portfolio. So we go to the utility first. So you have very fast. Instead of 600 plus, you get the 9 only. So you want to see what is these 9 stocks. Okay, you can go through a very thorough analysis on any of these companies. Okay, instead of you are looking at 900 stocks or 600 stocks, you are just looking at 6 or 9 stocks only. Okay, you have these 9 stocks only. Okay, so it's very helpful for you to make your decision. Okay, so if you want to change, okay, you just click here and go to the healthcare. I believe there's not very much. Okay, so this 15 stocks. Okay, so this is the first page. Okay, so you can go to the next page. Okay, so yeah, it's very helpful. Now you have shortlisted what stock you want to look at. So I'm talking about the value investing methodology at my end of my presentation just now. So I'm talking about price to book, I'm talking about the PE, I'm talking about the dividend yield. So you can use these 3 criteria into this screener. So let's say you want to have a very low PE, so you put below 10 or no one. Okay, so let's say 10 to 15. Okay, you want to have up to 1 time of the
Also don't have.
so I think we have to use this one. Okay, consumer non-sticker. Okay, it's defensive sectors. Okay, so maybe up to 5%. Okay, so you have already shortlist 3. Okay, it's much better. So you can implement the defensive stocks here. You can also implement the value investing strategy here. Okay, it helps you to make your decision on what stock you want to buy. If you want to buy a stock, if not, you can buy the ETF, the gold ETF. Okay, for you to hedge the market. Okay, it means that you are like so-called like betting against the market. Okay, or you want to acquire some gold related companies. Okay, because you know when the gold price are going up, so these gold related companies, they are making much more profit. Okay, during that market. Or you want to invest in the US ETF, you can do. I think I just share with you 5 ways how to make money in the bear market. Okay.
So you want to go back to your slide, is it?
So I think
that's the end. All right. So that comes to the end of Faiz, Mr. Faiz sharing on how to make money in the bear market. Yes. So let's see if there's any question. Okay, if any question, please write in the question box. Okay, yeah, it's almost 9:30. So now, the first question is, what is the difference between consumer staple and consumer cyclical?
Okay, we can go back to the slide if you want. Okay, the consumer. What is the question again?
What is the difference between consumer staples and consumer cyclical?
Okay, consumer cyclical, it react like it react much faster than the consumer what?
Cyclical.
Cyclical is much I just explain that just now. Okay, consumer cyclical. Okay, consumer cyclical, they perform better in good market. Okay, because you can see that this consumer cyclical. Okay, consumer cyclical. they comprise of less consumer types. Okay, much so like the consumer staple. I mean the consumer non-cyclical. It is the necessary things. Necessary things like food and beverages. Okay, so this is very necessary things. People need this kind of things during any market situation.
Okay, if I may add on, if I may add on, Faiz, consumer staple is the daily necessity that we
Yes.
consume. For example, it could be bread, it could be some beverages, it could be rice, biscuits,
Yeah.
cookies. These are the consumer staples. Consumer cyclical are the things that we consume, but not on a regular basis.
Yes.
It's like a consumer discretionary. For example, it could be airline ticket.
Yes.
We buy an airline ticket, and that belongs to consumer cyclical because not all the times that we need to fly.
Yes.
And for example,
Luxury products.
yeah, because like we look at the aviation industry, sometimes the stock price go up, sometimes the stock price go down. You follow the crude oil price, so that becomes a cyclical pattern. So that's why there are products that is classified under consumer cyclical, because they are not entirely defensive, but they follow a cyclical patterns in their economy and in their business performance.
Yes.
So that's the how I see there's difference between consumer
Yes.
cyclical and consumer staple. All right. So next is which platform do you suggest can be used to invest in ETF?
What platform? Every platform you
That's the question.
can buy the ETF. Okay.
Yeah, so long as you have any
Yes.
stockbrokers,
Any stockbroker you
because
can
these
buy
are listed
ETF.
on the stock exchange.
Yes.
Okay. And how do we buy ETF? The question asked.
How do you buy ETF? You go to your stockbroker. You search for the ETF code. Okay. So you just buy it like a normal stocks. Okay. You put your order, then
Okay.
if the order match, then
So does ETF pay dividends?
yes, it pays dividend if the ETF declares dividend. Okay, it's same like the stock. Okay, if it declares the dividend, then you will get the dividend.
Yeah. So the next question is, may I know what's the best book to read about Markov theory?
Wyckoff. Oh, best book. There are so many books written about the Wyckoff. One of it, the price volume analysis. Okay, it is written by one of the Wyckoff students. Okay, and you can Google a lot of books that are written based on the Wyckoff theory. Okay, there are so a lot of books, so I don't want to.
Okay. Okay. The next one is REIT considered cyclical as well?
REITs, I don't really see that REITs as cyclical. Okay, because REITs is a REITs. Okay, REITs is one of the asset that you want to trade. Okay, because REITs already diversify your investment. It do not. It's very different between the property. I mean the construction or the developer, because REIT it holds the tenant for a very long period of time. Okay, so we can see that they have the stable income. Okay, so when they have the stable income, so they can give you a stable dividend.
Okay. Next question, is it true that unit trusts are more aggressive than ETF? Well, seems like we have a lot of questions on ETF tonight.
Unit trust more aggressive than ETF. It depends on which fund are you referring. If you are referring into aggressive fund, then some of it might be more aggressive than the ETF. Okay, but the main idea of the ETF, it tracks the index. So some of the unit trusts, they are managed by the fund managers. Some of it may perform better than the ETF because the ETF tracks the index. Okay, because the fund manager have to beat the index. Otherwise, what for? They are paying the client paying the fund manager for. Okay, so the fund manager have to beat the index. But if you don't have that capability or you want to lower down your cost, then you can use the ETF. Okay.
Can we use Bursa Marketplace screener to screen local and external market ETF, REITs and stocks? Or is it only limited to local Malaysian market? That's the next question.
Obviously, the Bursa Marketplace is for our local market. Okay, otherwise you have to use the global so-called platform to screen the global scale ETF or stocks or REITs. Okay.
Okay. So can you tell us what is the difference between unit trust and ETF?
Difference between unit trust and ETF. Unit trust is not traded at the exchange. Okay, that's the first difference. Okay, between ETF and unit trust. But the ETF is traded at the exchange, so you can buy it like you're buying stocks. You can buy it. Let's say you buy it at 9 a.m. You can directly sell it at 9:01, 9:02. Okay, because it trades it every second. Okay, at every second. Unless otherwise in unit trust, you have to wait for 1 day, then only you know the price. Okay, you cannot know the price during the market open. Okay, that's the one of the basic difference between ETF and unit trust. Okay.
Yeah, the other difference is that ETF is more towards a passive investing, because ETF only usually the fund is created to track the indices, while mutual funds goal is always to beat the market. So that's why mutual fund is practices more like active management, whereby the fund manager will want to attempt to beat the market by actively buying and selling stocks. ETF just merely track the index by having the same exposure like what the index has.
The third difference,
so the cost is lower for ETF.
Cost for ETF much lower than the mutual fund. Okay, mutual fund you have to pay like 5%. So, but for the ETF you have to pay not more than 1%.
So it's the fund manager, respective fund manager, that manage the ETF. Okay, you can buy as low as one lot, for the ETF. So let's do a few more questions, then we end the session. Okay, the next is can you explain how Dow Jones and S&P 500 affect the local market?
Oh, okay. This is quite good question. Okay, because we can see when the Dow Jones and S&P 500 is going up, then our market is having that opportunity to go up too, because the global sentiment is very good, so it might affect our market. But if the Dow and S&P 500 is going down, so it gives really bad impression to all over the equity market. So we can say that if the Dow and the S&P 500 is going up, there are probabilities that our local market will go up too. Okay, but maybe the investors think that the S&P 500 and the Dow is more attractive. They will put more money there instead of putting their money into our local market. Okay, but if the Dow and S&P 500 is going down, definitely our local market will go down too. Okay, so that's the relationship between the Dow and S&P 500 with our local market.
Okay, let's do the one last question. How do China and US trade war affect our local market? Can you elaborate a little bit?
Okay. I'm here not as an analyst, but I can give my opinion, okay, on the trade war. The trade war already affect every equity market. Okay, so as I said it before, okay, when the global market is having a bad sentiment, okay, people are because investors they hate the risk, okay, uncertainty in the market. Okay, when the uncertainty in the market is very high, then it's very bad sentiment to all over the market. So our Malaysian market, one of the market that impacted by this the bearish sentiment, because there are too much uncertainties in the global market, and in fact we have some additional uncertainties in our local market. That why that explain why we are having this so-called bear market or correction.
Yeah, because the trade war affect businesses
Yes.
internationally. Some business may want to relocate their factory.
Yes.
Some business will want to reduce their orders from a certain country, and then people that are involved in the supply chain, which include Malaysian companies that supply internationally to US
Yes.
and to China. These companies that have a bigger exposure in the global supply chain will have their business impacted a little bit. But on the contrary, there are some companies that are not directly involved in the supply chain, but they got some of their businesses diverted away to look for other suppliers or contractors not in US or not in China.
Yes.
Then some of our local companies might get some of this outflow of this business contract. So it will help some companies. Of course, it will also not help some companies that are already existingly in the US and China supply chain. So we might see some opportunity, and also we could see the broader risk. Okay.
Yeah.
Because when people are generally fearful in the market, then they will sell down their portfolio to retain more cash positions, so that they will be prepared for any economic downturn.
Yeah.
And so when economic downturn comes, they'll be able to buy good asset on the cheap. So when more people want to sell in the market, so that put a sell pressure. Yeah.
In fact, some companies are getting more tax from the US.
Yeah, because of the
because of the trade war. So
Yeah.
so it cut the earnings for
this
some of the companies that
it reduces the earning of corporate companies, and thereby when the earnings is reduced, share price also drop. So that's how it affects us. Even though the trade war did not involve Malaysia, but there are Malaysian companies that supply to the big companies like America and China. All right, so I guess now we are slightly over time, 10 minutes, we are 15 minutes, we're 15 minutes over to our 1 hour webinar, brought to you by Bursa Malaysia-i and also managed by LifeChamp. And of course, we hope that you enjoy the webinar tonight, and we actually prepared some survey for you post webinar. So if you can help us to fill out the survey, because some of you here want certain topics, and we just want to know what other topics that you want us to focus on. So next time, or next year rather, we can prepare more relevant and practical contents for you, so that you can learn more. Okay, so we will need your feedback to tell us what topic you want to do or you want to hear from us next year. So please kindly fill out our evaluation form after this webinar is over. All right, so we still have 2 more sessions for the Islamic capital market webinar. More details will be released to you in a next couple of days. Okay, so please stay tuned to our email. All right, so with that, thank you so much, Faiz,
thank you
for spending your knowledge with us to share with us what is how to make money in the bear market, what products you can go into, such as the defensive stock, such as the REITs, which are more defensive in nature, such as ETF. For some of you who don't know what are ETF, today maybe it's the first exposure for you to learn about ETF. Okay, so these are some of the products that you can do when it comes to the how to make money in the bear market. All right, so of course you can also, if Malaysian bear market, you can also go to US market by going into the US ETF, okay, to participate in their bull run.
Yes.
Okay, so these are some ideas that Faiz share. Hope you can take some lessons away from today's webinar. So if not, I will see you in our next webinar. This is Shane Choo signing off. Okay, bye-bye.
Bye.